Euro, there we go. Perfect. Alright, we straight. Cool. How's it going, everyone? So really, yeah, I was being bombarded today with some of because I posted some of the setups today. So I don't want to name no names, but there's a few. You know who you are, you know who you are. Give me a second, let me mute everyone. I'm getting some mad echo. Yeah, so I just wanted to go over really how I see it, because I know some of you, if we're talking EMC, I know some of you already know, what Brian has taught you basically. And it's not wrong. Definitely don't. I don't want to say it's wrong, because obviously Brian is the one who taught me as well. But I've had to navigate my own way to find my own understanding, to so that I know and I can make my trades as mechanical as possible, without really second guessing myself. And again, Brian doesn't use any indicators. As he always says, if you've read his PDF or even if you've been in his live, he doesn't use any indicators whatsoever, just pure price action and market structure. And it's the same sort of thing that I've got going on as well. I use one indicator. Now, if you know me, and I've spoken to you before, you know that indicator is literally just a fractal. Now, fractals, it basically just marks highs and lows for me, right? And I want to share my screen so you can see my screen as well.
Yeah, we can see, bro.
Perfect. So fractals is the only indicator that I use. I know you can see there's two there. The second one's not a the second one's not an indicator. It's where I've got this tag at the top. Well, I use one fractal, and it's just simple highs and lows, right? And my fractal is set for a period of 2. So basically, what that means is no matter what time frame I've got, because obviously I can set the indicator for different periods. So for example, if I want to do like every 4 candles, basically, I'll change the periods to 4, and it will identify and give me highs and lows every 4 candle. So in other words, the algorithm in itself for that specific indicator will identify which candles which should be marked as a high and which one should be marked as a low. If one of them gets marked as a low, and then the next 4 candles comes by and doesn't create another low, or let's say if it takes out the previous lows and the previous fractal should basically be removed, it will automatically adjust itself. In other words, that's as simple as that. So that's the only indicator that I use, and I put it as a period of 2 because that means there's no, although indicators are lagging, technically this indicator is not going to lag because every 2 candles. And bearing in mind, with the strategy that we're using, the EMC, obviously swing setups is on a daily time frame. Every 2 daily candles, you are either going to find an EMC setup, or if you don't find an EMC setup, the EMC is still forming anyways. So it's a very good way to identify, your highs and lows, and whether you see, a breaker structure or maybe even some sort of reversal pattern where price is, sitting at some sort of support area or a resistance area, similar to how we had the Euro CAD trade today, and some people were thinking, how the hell did you manage to get that? If you know the setups and you know the strategy and you know market structure, it's not hard. But again,
what fractals are you using, bro? Which one on the indicators? That William fractals or the other?
Yeah, William fractals. So if you're on Trade Assistant, I said Trade Assistant, ignore me, sorry. If you're on Trading View, it's literally Williams fractals. This bottom one over here. It's the one. Even on, if you've got Trade Locker. I think Trade Locker have indicators as well, right? On the actual charts, not the charts that you're marking up on. Actually, no. Well, the Trade Assistant, not Trade Assistant. Why do I keep saying Trade Assistant? Trade Locker has indicators as well, so you can type it in on Trade Locker. It's the same sort of thing. It is very straightforward and simple. It marks. Not only does it identify where your highs and lows are, that's basically what the job is for, but you can actually use it for other things. You can use it for breaker structures. You can use it for change of characters or market shift, right? Or some sort of reversal or continuation. That's 4 things I just pointed out. You can also use it for support and resistance zone. That's 6 things, right? You can use it for almost anything. It just depends on how you, as an individual, see the market and what you want to use that fractal for. If you don't have those fractals there, it's the same sort of thing, but you wouldn't really be, you wouldn't know what to look at. In other words, right? You'd be second guessing yourself. And I don't second guess myself at all when it comes to using these fractals, as simple as that. So if anyone does want to use any indicators for EMC, I would suggest go ahead and use a fractal. Brian doesn't do it because that's Brian. And I know a lot of other people, I've seen a lot of other people using different indicators for EMC. And I'm telling you, I've tried all sorts of indicators to try with, go to try and go in line with EMC. I've tried EMAs, I've tried standard moving averages, and I'm telling you, you are just gonna get mixed up because you might get a breaker structure, but then now you're saying to yourself, "Oh, price is rejecting off of the 50-year EMA." So where you might get a breaker structure to the upsides, and you're looking for buys just off of the EMC setup, but because price is rejecting off of the 50-year EMA, you're no longer going to take the buys. You're going to actually take the sell. Next thing you know, you got stopped out because you didn't take the buys because you were too worried about the moving average. The moving average, it doesn't care about these sort of setups, right? So I wouldn't use that because you'll just be, again, second guessing yourself and you'll be adding some sort of extra confluence, which isn't even a confluence. You're just adding extra stuff that isn't needed at the end of the day, right? So that's my rant for the first one anyway. So if I go over EuroCAD, for example, right, which obviously hit TP. Now, straightforward and simple, as you can see, we'll always start off on a daily time frame if we're looking for swings, right? Now, last week we did have a bearish EMC, as you can see. So we have a breaker structure from this fractal over here. This is how I would identify and mark up the charts as well, by the way. Yeah. So if you want to follow along, follow, or you might be able to take some bits and bobs from me. But this is how I would do it. So hold on, give me a sec. What's happening there? Okay. Oh, I know why. Ignore me. I was using the wrong button. There we go. Okay, so we've got a breaker structure here, right? Now that's a breaker structure there. So this is the previous daily low, of course, right? And then we've also got a breaker structure now from this high here to this low over here. That's one impulse. Now your correction, as you can clearly see, you've got two minimum candles, which is there. Now I will draw my high from there, and I'll draw my high to my lows to here, right? We've also got price coming up to the 38.2 during the retracement. That's an extra confluence, right? And with these sort of setups, that technically I don't want to say there should be a minimum of like two retracement candles. Sorry, not retracement candles. There should be a minimum of two confluences. But really and truly, any sort of strategy, you want to have a minimum of two. Our first two confluences is literally a breaker structure, right? So a continuation, and also a retracement to the 38.2. That is the first two. The third one is one impulse to one side and then another impulse to the other side. That can be a third confluence. It depends on how you want to mark it down, basically. So once we've got the second retracement candle, which is another confluence, as I said, prices hit the 38.2. Now that marks the beginning or an end of a retracement, right? But as much as since we've got that, basically what you want to do at this point is, and this is why I use boxes rather than lines to mark out my zones. This is what I want to do. So let me even get rid of this area here. Give me a sec. Perfect. So now we've got this, right? So imagine this is where price was at on Wednesday. So we got the retracement. But guess what? Since that retracement, what did price do? Price broke above the top of this box. I always draw my zones. I don't draw the wicks, right? On a daily time frame, if it's anything below a daily time frame, I always use the body, open or close, depending on if it's a buy or sell candle. But I use the body to the wick. So in this case, because it's a bearish candle, I use the top of the body to the bottom of the wick. If it's a bullish candle, then I will do something like this, for example. Right? That's what I always do on any time frame that is below a daily time frame. If it's a weekly, because the weekly candles are so big, I would only cover the wicks, and I'll show you that in a second. But in this case, as you can see, the retracement, although we did have a good retracement, the retracement was smaller than the actual impulse. But the only other thing that threw me off here is the fact that price closed above this box. That already threw me off, and I said I'm no longer taking this setup, right? But I was looking for a bearish sentiment in this case, and it was bearish up until the point where, as we can see now, and this is where I'm doing the weekly structure zone. As you can see, I'm just covering the wicks, right? Because if I did the body, now the body would be this entire area here. If I did that entire area, you can see why I don't. See, now I covered the whole trade basically. It's inaccurate. So that's why if it's above a weekly, or sorry, if it's above a daily, I only cover the wicks. Anything below a daily, I will cover the body and the wick, just for that sake. Just for that actually. Now in this case, as you can see, since we've broken above that zone that I just mentioned, it's already invalidated the trade for a sell setup. In this case, I'm no longer looking for the setup. But just because I'm no longer looking for a bearish setup doesn't mean that we cannot catch a bullish setup. So what I will do is I would leave my zones exactly where they are, but I'll take away the fib. That is the only thing I'll take away. So once I've deleted my fib, right? This is on a Wednesday. All I need to now wait for is let me find a EMC setup in the opposite direction. So what I'm going to do is wait for 2 retracement candles in the opposite direction. Since we've got the impulse, which is this candle here, these candles here now, right? So we're scrapping this impulse here. We're no longer looking at this impulse. This is the new impulse we're looking at because our directional sentiment has now changed. So we've now got our second retracement candle. Now, off of our second retracement candle, what do you guys see now? You can see how price is respecting the blue zone. The blue zone is the daily time frame, by the way, which is also the setup time frame. That's what I call it. And then the red zone is also the higher time frame. So I can either draw the weekly or the monthly in the red zone. It doesn't really make a difference, right? In this case, as you can see, what did price do? The retracement has respected that area, right? Not only has it respected the blue zone, which is the setup time frame, it broke above that zone. Number one, it gave us one impulse. It gave us an impulse and it gave us a retracement. It also retraced to the 38.2 and also past the 38.2, which is good. It's still less. The correction is still less than the actual impulse itself at this point, right? And on top of that, it's also respecting the weekly time frame. All of those confluences tells me that I am no longer going for sales in this setup, right? And on top of that, because I've already done the weekly, I can go to the monthly as well, and I can look for a monthly support area, which is down here, right? So I already know that the monthly is bullish. Why is the monthly bullish? Because think about it. If the monthly is all the way up here for on a resistance area, right? But we're all the way down here. Where did price come from before we saw that bullish setup? The price came from the very bottom. In other words, support. Price never came from the top when we got this setup, because what it did was it came from here, went up here, came down from here, and it's gone back up again. So point A, point B, point C. We're looking for point D at this point. Monthly bullish, weekly bullish, daily we're bullish. We know we're bullish on the daily because we've now flipped the script. We was bearish, we got invalidated, but the setup is still there. So we're going to take this now, right? And I can see the chat's popping off. I'm going to come back to that in a second. So at this point, if we're talking, this is just for the EMC setup, by the way. I'm not telling you to take these sort of setups. If you're not using this strategy, it's literally for the EMC setups. And if you don't know what EMC is, go and find it. But if you join this, you should know what EMC is, because that's what I'm here for. Now we've got the retracement, 2 minimum retracement candles, bam. We adjust our fib. We adjust our fib because we want to get involved with the next impulse. That's the whole point of adjusting our fib. Otherwise, we could have left that here and we would have placed a pending order somewhere here, and the negative 27 would have stayed the same. As you know, when you adjust your fib, you know that these fib levels all move. The negative 27 is actually decreased in terms of where our TP is. And if you haven't even noticed, I'll draw a line for you so you can see it, because sometimes that goes over people's heads. It's been reduced by literally, I don't know how many pips, right? It's even less than 10 pips. But that 10 pips is actually something, right? Because I'll show you what EuroCAD did today, and this is why you only go to the negative 27. So now that we've got our retracement done, boom. Now we go to our entry time frame, because we've got all of those confluences that are already in place. Simply wait for the break and retest of the 61.8. Okay, I thought that was going to be the break. Okay, so we haven't officially got our break yet. As you can see, we've got a wick here on a 4-hour time frame. However, if you go to the daily again, as you can see now, price basically just came back past our fib, just wicked it a little bit, but we've now got an official break of the 61.8. At this point, you've got two options. You could either place your stop loss, not place your stop loss, place your entry at the 61.8, target in the negative 27, right? Let me get rid of these lines over here as well. So you can target the negative 27, and your stop loss can go just below the 88, so you can target the 1 to 3. And I will get rid of these boxes because we already know what they were used for, right? Let me get rid of the monthly as well. Okay, so keep an eye on this one as well, by the way, because that monthly, I know it looks big now, but don't forget that was the monthly wick. It's literally just a wick, right? So it looks big on a smaller time frame, so ignore that for now. But as I said, so you can either put your stop loss a few pips below the 38, below the 88, and target at 1 to 3, or because technically from here, from the very bottom of the fib, which is here, right, has price created some sort of structure on the way up, as in highs and lows and highs, before it breaks that 61.8. Has price done that here? Bearing in mind that this candle is the break, by the way, and this is the bottom of the fib. That was a genuine question for you guys to answer, by the way.
Oh, no.
There we go. Perfect. It hasn't. And I'll show you another example where it has. So it hasn't, right? So at this point, because there's no structure, where are you going to put your stop loss? You can actually put your stop loss at the very bottom of where the wick is, which is there. And then what you can do is, if you still want that 1 to 3, you adjust your entries and you leave your TPS the same. And that's when you get a 1 to 3 like that. Now your entry means that technically now it lines up with this area over here, right? Because although there's no structure as price went to go and break the 61.8, there is structure here, but there's no structure in terms of where you can actually put your stop loss so that you're covered. Because you know, every time you place your stop loss, you should put it either above the previous high if you're selling, or above below the previous low if you're buying, right? So at this point, technically, because this candle itself, that's the last low, you put your stop loss either on the dot or maybe even a few pips below, totally up to you. As long as you get your 1 to 3 or get a trade that you are comfortable with, right? But the setup is the same. Now, if you put your entry exactly where I just told you just now, so you've got basically an entry that's below the 61.8, you'll see the difference between taking an entry like that and then taking a normal entry and potentially risking your stop loss getting hit, right? So you've got two entry types. You've got this one here where your stop loss is covered, and then you've got this one here where your stop loss isn't covered, right? So these are the normal entries. So let's play price, because this actually hit TP today. So here we go. So we've got tagged in on this candle here already, right, with the normal entries. We also got tagged in again here with the normal entries, but we haven't been tagged in yet for this entry type over here. Now, as you can see, what did price do? Price took off. At this point, this entry type is no longer valid because we never got tagged in. Price never came down to our entry point, as you can see. Our entry point is all the way down here, right? So that's the only risk factor with an entry type like that, where price doesn't create structure as it goes to break the 61.8. So it's up to you how you want to, enter your trade. But there's options there. This one is more risk adverse, Whereas this one is risky with a setup like this where price doesn't create structure as it goes to break the 61.8. So totally up to you how you want to take it. However, because we got a setup like this and we wasn't risk averse and we just kept it mechanical, this is normal. These are the normal entries. This is what happens. We get tagged in. Our stop loss is, around the last low, but it's not at the low and we're not covered. But it is where it is. So at that point, now price is taken off. Price is now closed above the 38.2. At this point, any price action above the 38.2, usually what it does is it will break that area there. It will come back down and it will take off. In other words, it's basically create another high and another low, right? And then on top of that, you can also see, look, you got these fractals over here, right? And this is why I say you can use fractals to help you, because you've got those fractals over there. That's a high. Price is broken above that high. After the price breaks a high, what we'll be expecting to do normally? Usually, we should expect for price to come back to retest that area. This was resistance. Now now we're expecting it to come back to turn into support to go higher, right? That's what we're expecting price to do. And on top of that, right now, because price is above the 38.2, as per the strategy, once you get a 4-hour candle close above the 38.2, you move your stop loss to break even. So right now, what we're going to do is move our stop loss to break even, and then we're going to play price. Now, you remember what I just said? After price breaks a high, we should expect it to come back and retest that same area. And that's exactly what price did just there. And this is all today, by the way, right? Because we got our entries yesterday, 30 minutes after New York time, depending on what time zone you're in. And then we've actually got crazy price action that took off today, London time and New York, London session and New York session. So we got that retest of the 38.2. I wouldn't suggest trying to scale in and do a setup like that, because it is probably like a 30%, 40% win rate trying to scale in and get in a setup like this. Like, there's going to be times where price closes above your break-even line, which is this area here, signaling that you should break even, and then it reverses. At that point, now you just broke even for no reason. So totally up to you if you want to try it. I wouldn't suggest it, right? And at that point, because it was today's trade, literally TP got smacked. That setup there isn't a clean. I don't want to say it's not a clean setup, right? Because you can catch several setups like that on several occasions. It was one of those confusing setups, but if you know how market structure is and you know how to identify market structure and price action, and directional bias, it is very easy for you to catch something like that, right? Same with GBP/NZD, for example. Like this one went over my head and I didn't catch it, but I still marked it up and I still I submitted it in the live lab for you guys to see, because I know someone would have taken it at some point. Maybe they marked it up and maybe they didn't, but even that one had a similar situation, right? So we've got a double bottom formation over here, and then we've got an impulse, right, which price failed to break. Let me start again so you guys can see properly. So we've got impulse, right? This should have been a breaker structure, but as you can see, price wicked it. Price never broke below it. So at this point, we've now got a double bottom because price failed to break that breaker structure. But guess what? Because that's the same zone that we were looking for price to break, we keep it there just in case price decides to create an EMC to the opposite direction, right? And the only time we're going to take it is if the higher time frame also matches up with it. So if the initial setup was bearish and the higher time frame matched up bearish, doesn't make a difference, because what we can do is if it fails to break lows, or let's say if it does break a low and then come back and also break the high, it's a reversal. We can catch a reversal like that. In this case, we've got a double bottom. It's a clear reversal. Double top, it's a clear reversal. So now we've got a double bottom, right, on the daily time frame. We know it's obviously it's bullish because you see what price just did, right? And then now at this point, let me even take it back a step for you guys. Give me a sec. Oh, I was pressing the wrong button. Sorry, ignore me, guys. Okay, cool. So I'll take it back a step. So we've got the two retracement candles, right? I'll go over to the weekly time frame. So we know that this blue box is the daily time frame, right? I'll look for a weekly resistant type to support area, or any areas that will basically tell me that this is still bullish, or any areas that is telling me that price is at a resistance area, telling me basically that I shouldn't buy this pair any further, right? Because you can buy into resistance, but you don't buy whilst you're at resistance. You can sell into support, but you don't sell whilst you're in support. Doesn't make any sense. So at this point, we've got resistance. Price broke above it on the weekly, acted as support. It's clear as day is support because obviously you can see these wicks. Bam, it's bullish. Weekly is bullish. Monthly, look at where the monthly resistance is, all the way up here. So you could say that that's where we are targeting, right? Because we're nowhere near there yet. Price came from down here, but price is nowhere near here yet. It hasn't even tapped into it yet. So we could say that's where we're going to, because the daily is bullish and the weekly is bullish. So the monthly, we're heading towards the monthly, right? So at this point, guess what we're going to do? We wait for the EMC in the opposite direction. Impulse, correction. Correction start from here, second candle to the top over here, right? Now this candle, as you can see, because the candle closed, because it's still a black candle, so the opposite color candle, but it closed above the 61.8. It just means that we can still get our entries, right? So we got our entry here. So this is the candle that closed, the second candle. So let's see what happens if. Let's see what happens. I don't think anyone actually would have been able to get their entries. But as you can see, let's see. Yeah, some people would have been very eager to get in, basically. So they might have even got in on this candle before the day closed, because they would have been monitoring their setup. So let's see what happened. Okay, boom, perfect. So even this one, if you had waited for the second daily candle to close, you wouldn't have been able to get into this trade because price closed above the 38.2 just with this candle, right? But as I said, some people are very eager. So if you didn't wait for for the daily to close, the second daily candle to close, but you were monitoring it and you saw this, kudos to you, because obviously you would have had your entry, and you would have had moved your stop loss to break even at this point over here. But you got lucky because not every time does price do this. Every time you have to wait for that second daily candle to close. If you don't wait for it, you're gonna get a fake out. You're gonna get false readings. So in this case, if anyone did get in early, kudos to you because it went straight to TP, right? But I'm showing you how to read the market when EMC isn't clear. Not every EMC setup is a setup, and I've been saying that from day. If you know me, I've been saying it. Not every EMC setup is a setup. And if you've been trading EMC long enough, you will totally understand, because there's going to be pairs that you take that Brian hasn't called out yet, and you took a huge loss on it, and you're thinking, what the hell did I do? Why did I take that one? Damn, I should have waited for Brian to call this one out. No longer do you need to wait for Brian to call it out. The blueprint is right here, right? And kudos to Brian, because Brian taught me this, right? But I had to go through trials and tribulations to really know like where I was going wrong personally. I found I found my way basically, and it's as simple as that. This is how I managed to catch Eurocad today when people were confused about how the hell Eurocad was even a setup.
When it's coming directly, this
Hold on, who's that?
directly from an Excel spreadsheet that different would feel. So you have to QC.
Who is that?
Sometimes you see things that
Bruh, give me a sec. How'd you meet people? Give me a second, guys. God damn. I think he's muted. How do you meet people in this? I don't even know.
Sorry, before you move on to gold, can you go back to the pair that you were talking about just now?
GBP yeah?
Yeah. Why would you not include the second to last low wick in the FIB setup on the daily?
This one.
Yeah,
That's
like,
exactly
yeah.
what I was gonna ask. So that one, because technically it's not the second retracement candle. You always pull it from the second retracement candle to the top of the retracement. So because the retracement, okay, I think of it like this, right?
Mhm.
And it's a very good question because technically gold actually did the same thing. Now,
Mhm.
some people are actually still in gold waiting for gold to hit TP, but gold has already hit TP in this case already. And I'll show you an example of why. So if this is the impulse, the top of the impulse, sorry, the end of the impulse is actually where price changes color. Now, price
Mhm.
changes color from here. So at which point from here do we have the highest point? If this black candle had a higher wick than this, the last blue candle, then that's where the top of the fib would have went. So for example, if it had something like this, the top of the fib would have went here, down to here, right? Now, because this blue candle has a higher wick than the previous black candle, that wick here would be the top of the fib, and the same with this one, right? Because we do it from the bottom to, so in other words, we do it from like right to left because we want to get involved with the next impulse. We don't want to do the normal way, which is left to right. If it was left to right, which is literally the normal way to draw the fib, you'd be correct in terms of using the bottom of this wick, right? But because we're doing it the opposite direction, we use the bottom of the lowest part of the end of the retracement. End of the retracement is this candle here. So we use the bottom part of that, not that one there. In this case, for example, like from left to right, we would have done this here. Give me a sec. Let me see if I can show you guys this properly. Cool. So because this is the impulse here, right? Remember when I said left to right, we use the bottom of the left, the candle to the left. This candle here has a lower wick than the actual impulse here. So we use the bottom of this candle to go to the top of this candle here, right? In this case, if we had, let me just make it up real quick. If we had this, for example, now, right? And if I change these colors as well. Boom. So these two candles are the retracement candles, right? So if we had these candles now, for example, and I had another wick here, for example, don't mess about with me now, bro. Fuck it. You got use your imagination. Do you know what I mean? Yeah, you guys know what I mean. That's the wick, right? Ignore what the wick is. That's the wick. Basically, you would have done it from here to here, right? Because this top part would have been the wick, but then we're doing it from left to right. So then we would use the bottom of the impulse. The impulse technically starts here, but we use like buy to sell candles, in other words, right? Because we need to include the wick. So we're not going to do it from this candle here, right? The bottom of that wick candle. No, we need to include the previous candles that also was there. Because these are just normal candle wicks and they're not, superior in that sense. When I say superior, I mean a candle like, what pair was it? There was a pair. I was literally looking at it a second ago. I think it's NZDJPY. Something like this, for example. You see those wicks? That's too big, right? Especially this bottom one here. But because the retracement is still a decent size for the retracement, you've got two options to do it. Now, okay, perfect. Right here, right? This is a perfect example. This wick here is lower than this one here, but it's also too big because now that's going to give me a false reading in terms of the impulse and the retracement. So you've got two options. You can either do it from here because this the bottom of this wick is much closer to the actual impulse where it starts. It's here, right? So you can either do it from there to this body here. You could do it to that wick here, which could give you a better reading, or you could do it from here. It's totally up to you how you want to see it because at the end of the day, if technically there's no right or wrong way to do it, but at the same time, it's like you want to make sure you've got the right entries. If you don't have the right entries, you're going to get stopped out because you've got the wrong entries, right? So at times you would get literally a perfect shaped impulse and correction, and at times you might get some fuckeries like this, for examples, right? And there's nothing you can do. So even this pair, for example, NZD JPY, I know some people were calling out. That's a no-no. Like, I'm not even bothered to look at this just based on where price is at, because that resistance already, and I can show you guys that later, but it's at resistance, and also the candles that are being formed is all funky, it's all over the place. I'd rather see proper candles that are being, formed like this, for example. A wick like this here, that's a normal wick to me on a daily time frame, and I know that's a normal wick because each candle, as it forms, each low is also getting taken out, right? And it's not traveling too far. If I saw a wick like this from this candle here, and I saw it like that, there's no reason for price to be doing that on a normal given day. That's news. Same reason as to why we had, what pair was it on NZD JPY? Same reason why you had this NZD JPY. That wick there in itself is news. So I'm going to stay away from candles like that. That's the reason. That basically answers your question in full, right? That's why you draw it that way and why I didn't include the other candle and all of that jazz. It goes hand in hand with all the other ones as well. But yeah, what was I on? Gold. Okay, same reason with gold, right? Now, depending on how you drew this, technically, we already knew gold was bullish, right? Not bullish, bearish. Ignore me. So gold is bearish at this point. All-time highs. But then I've also got this fractal over here in the weekly time frame that's giving me this area here. Now I've marked that area, and again I just covered the wicks of the actual candle that's got the fractal on. So I've marked that there, right? As soon as I marked it, you can see prices decide to come out of it. On top of that, because we've been pushing price up so high on the weekly time frame, or even just overall, price has to come down at some point. So the way I saw it was impulse, because obviously we've got a different color here, and I wanted to see a second retracement candle. Although price already touched 38.2, I wanted to see a second retracement candle, just because I'm trying to follow the same strategy, right? So I was looking for a second retracement candle. That is what I said to myself in the first place. But on top of that, I already had that weekly zone, and I also had this daily zone over here marked out. I'll change that to blue so you can see it. And what did price do? Impulse to the downside, and price broke below the daily zone, which is the blue box, right? Not once, but twice. This candle here and this candle here. Now, normal impulse and correction, this would have been it if this black candle came, further down a little bit. Let's say if it came to about this area here. Even if it didn't take out this low, but if it just came down to this area here, that would have been a normal impulse and correction. But because we've got some sort of funky candles going on, as you can see, right? Because technically speaking, each candle that's being formed in one direction should take out the previous high. For example, each blue candle that you see, each time there's a blue candle that's formed, the high is also taken out. The previous high is also taken out. In this case, as you can see, after this candle, the low was taken out with this candle. After this candle, this low wasn't taken out. And when I say taken out, I don't mean a close below it. I just mean a wick past it. Nothing happened, right? So in this case, because we've got the impulse here, and we've also got the correction, from right to left. Sorry. And we do it from right to left, right? So in this case, we're going to do it from here to here, right? And we're doing it from here to here and not here, because technically this candle here is the beginning of the retracement, and then this candle here is the end of the retracement. But remember what I said, the highest and the lowest points of the wicks that end or start with the retracement. So from here to here, basically. If you did it from here, you would still be in this trade right now. Not to say price is not going to go further down, but you'd be very careful. And I'll show you why you should be very careful, right? But if you did it from here to here, good job. Because that means now our entries, we would have got tagged in. This would have been Friday, so Friday New York session. So I wouldn't even suggest taking that one just yet. But basically Monday, we would have got tagged in again. This is the beginning of London session. So you would have entered your trade beginning of Monday session. Stop loss there. Target negative 27, right? Get yourself a 1 to 3, or even give yourself a bigger breathing room. Boom. Target yourself. So now you got yourself a 1 to 3. Now you would have been in hefty drawdown, nearly stopped yourself out, but you held it because the higher time frame says so. Higher time frame says it's bearish on the weekly. The monthly, you don't even need to look at the monthly because you already know all-time highs. There's nothing to the left-hand side. Literally, we are in all-time highs. But just off of the weekly and the daily, bearish, both of them, right? So you're going to hold that trade. As you held it, as you can see, it took literally, entering from Monday, it took literally 1 day, 8 hours, right? So you guys can calculate that if you want to, but it's 1 day, 8 hours. And it literally hit TP. Now that's because obviously, as I told you, on the daily time frame, if you did it from the highest point to the lowest point of the beginning and the end of where price starts the retracement and ends the retracement, you would get a better accurate point, better accurate area. If you did it just by following the fractals, that's where you can get in trouble. I only follow the fractals in terms of the actual structure area, or if the low had been taken out with a wick from the next candle, then I would still follow the fractal and put my fib down there, or whichever lowest point it was. In this case, because I didn't see any lows that were taken out, I'm not following that rule. So if you took this one, perfect, TP hit. But if you took this one, this is where you got to be careful, because number one, you didn't get your entry. And I know some people are very eager, so they probably would have set a buy stop, right? So they're probably in the trade, or maybe they decide to enter on the 1 hour time frame, and then you're still targeting the negative 27. So you're still in this trade, right? But guess what's happening now? If you think about it, you've got a double bottom over here, which is where price is at right now, right? At this point, you should be at break even, as I said, because obviously you managed to get in early anyways. So we've got a double bottom over here, but then this same area, if I drag this to the left, what do you see here? We've got resistance, support, resistance, support, support, and what's it doing now? Support. As long as this area holds, if this area holds and does not break on the 4 hour time frame, and we've got 38 minutes by the way, so as long as price does not hold, as long as price holds this area and does not bend and does not fold, price is more than likely, well, it looks like it wants to shoot back down now, but price is more than likely to shoot up. If it does shoot up and close above this area, this box, more than likely you probably see something like this happening now, right? And price is going to go up, and then at this point you get stopped out because you didn't take partials, but it's a no losing trade. You probably would have just incurred some charges, some fees, some swap fees, all of that jazz. But at the same time, price can go in either direction. If price really wanted to come further down, it could come further down to the negative 27. And then that same area that I just drew just now, you also have that same area over here as well, right? So price could come to the negative 27 and then start acting as that support area that I just mentioned. So because you got your resistance and support areas there, you got a support bounce over here, and then you also, well, if it does come there, you would also have a support bounce over here as well before price decides to completely take off in that direction and then continue going bullish. Because gold long term is still bullish. It's only as of recently where price has decided to go bearish, right? You shouldn't be selling gold if we're talking long term, right? Because gold is it's a commodity, right? It's a safe haven. People invest in that constantly every single day. It's something that you should be constantly buying, not selling. In this case, we're only selling because it's a pullback. Don't forget, on a weekly time frame, it's a pullback. That's why we're selling. But the question is, how long are we pulling back for? And if you know Fibonacci and you know how to draw your fibs, you already know the first point of call when price comes down and makes a pullback. First point of call, if you want to talk about golden zones, is the 50%, 61.8, and the 78.6. Technically, those three fibs are all the golden zones. If you guys want to Google it, if you don't know what that is, or if you don't know what I'm talking about, that's the golden zone. But the first point of call where price tends to retrace from, if it really wants it to, is the 38.2, or between the 38.2 and the 50. That's actually where price is at right now. Because I don't have my 50 on, but I can show you now. That's exactly where price is at right now. And you can see as soon as price hit the 38.2, what did it do with this candle? It rejected immediately and decided to start going back up. But it came back down and it's touching the 50 now. So if price wants to take off from here, price can do that. Because price is long-term bullish anyways. It's just giving you that pullback to go further up. People are going to start buying cheap. Supply and demand. If you know what supply and demand is, I don't mean supply and demand as in like your support and resistance areas. No, I mean basic economic supply and demand. If you know what that is, you know exactly what I'm talking about when I say people are, all of this is just a pullback to allow people to buy gold for cheap. Simple as that. It's as simple as that. But that's it really in terms of EMC and everything else that I went over and how I see the market. And I hope is it.
Do you use news or strength meters or anything else like when you trade? Like, do you look for news?
I don't use I don't. I know my FX book used that sentiment thing, and I know I have it in my, what do you call it? My Notion page as well. I don't use any of that. I used to. I don't use any of it no more. Literally.
You don't pay attention to news?
Oh, news. Sorry. If you're sorry, I thought you were talking about the sentiment meter.
You know, no. Like the actual news. Yeah, I know the sentiment only. Like,
oh, let me go over news actually, because that could be very useful for you guys as well. I'm gonna catch up with the chat in a second because there's a lot going on. Let me see if I can pull up news real quick for you guys. I need to be careful with my browsers though. All right, perfect.
Sorry, so just before you proceed, I just want to kind of recap what you went over. So when drawing on the fib tool, we're technically avoiding manipulation candles, and we're just doing it from the start and the end of the retracement, right? Got it. Okay. Yeah, because I missed that gold trade this morning. I did it the other way. Yeah, and I was waiting for it to hit that 61, but it didn't.
It depends on how. Okay, so it depends. So in terms of EMC, we do it opposite direction because we want to get involved with the next impulse, the next wave. So first wave in this case, if you think about it like this, not right. I don't have my. Let me share my screen again. Give me a sec. So you're not wrong in the way that you're thinking. The normal way to draw a fib is literally the first wave and the second wave. First impulse, second impulse. Point A to B, point whatever. It doesn't know how you want to do it. That's the normal way to draw a fib. But because we want to measure, this is the normal way basically the normal way to draw a fib is to measure the pullback. That is what this is doing. Point A here and point B. That is the normal way to draw a fib. So in this case, if you're just starting off and you don't know what EMC is, this is the best way to do it because you can use your confluence to say, okay, price pulled back to the 38.2. Once it pulls back to the 38.2, that should mark the beginning or an end, depending on where price is at, of a pullback. If it doesn't do that, then technically it's not a pullback. Yeah, so that's the normal way to draw fib. Because we are getting involved with the next impulse, once we've got two retracement candles minimum, it can be 3, it can be 4, it can be 5, as long as it's smaller than the actual impulse. So in other words, basically, as long as price doesn't come past, let's say, this area here, right? Which technically should be around, let's say, the 78.6. Yeah. So as long as price doesn't come past the 78.6 fib, you could say to yourself, okay, we can have 7 different candles. As long as price doesn't come past the 78.6, we are still golden. That can be a rule for you. But obviously, because because of me, I already know where it is. But if you don't know, you have to visualize it for yourself and try and pick which ones you think is obviously too much of retracement for you, or which one is. Do you know what I'm saying? So if you don't know, obviously you can always ask, but it's better for you to try and identify it or visualize it yourself. So at that point, now we adjust our fib and move it to the bottom of the retracement, wherever that retracement is. If the retracement is all the way down here, we adjust it, and then simply we just wait for the break and retest of the 61.8.
Okay, got it. Thank you.
So that's the only way, because I know when we draw our fibs, because I can do this, for example, and you're probably thinking, what the hell? Yeah, no, it's the same thing as I did basically as there. I just moved it here. Right? So that's what that one is for. What am I doing? News.
Yo, Richie, do you know when you just draw the fib there, right?
Yeah.
So the black candle, do we put it to the furthest, longest wick on the blue candle?
You talking about this one or here? This one?
Yeah, that one there, the first one.
Yeah, I put it up there.
Right, yeah, that's cool.
I put it up there. Yeah, I put it up there. You can do it here if you want to, but I put it up there. Technically, there's not much of a diff. This because the distance between this one and this one here isn't much.
Yeah,
I would do it to the top.
Yeah. So just gonna repeat this again. So know the middle black candle there. So go back on the, was it on the daily year on there? Or the weekend, sorry. Yeah, you know the middle one? Yeah. So do you know if that wick was lower down?
If you're saying, for example, let me try and get rid of this wick. If you're saying if it was like here, for example.
No. So you know the middle black one there. So if that little wick was really, really low, would I put the fib still on the last black candle to the blue?
Are you talking about? Okay, you're talking about this middle candle, right?
Yeah. So if that wick was lower than
this candle.
No, this other black one here. No, the last one.
Oh, this one here.
Yeah. So if the first retracement candle's wick was lower, do I still place the fib?
Sorry, you're talking about this wick to the bottom.
Yeah.
Got you. Yeah, I didn't know what you were talking about. Okay, I got you. So you're talking about this wick here. Okay, so if this wick was lower than this one, would you still put it the bottom of the fib basically with this in line with this candle?
Yeah, that's what
the wick was. Nah, I wouldn't. I would use the second retracement candle or the last retracement candle. Let me not say second. Let me say the last retracement candle. Because remember, if you put your, let's say, A2, I'm going to come on to the news in a sec after this, by the way. I haven't forgotten about you. Let's say you got this, for example, right? And then you now put your fib here to here. Guess what? Look at that already. You already know, okay, that's a retracement candle, but then that's a major wick on your setup time frame. So if I go on my entry time frame, you're going to get false readings. You're going to get a reading that says, okay, price came up like this, broke above our 61.8. Oh shit, I need to enter. Boom. Guess what? You're going to do this and price is going to do that. Because you got a false reading. That's why I always wait and use the last retracement candle. Even if this happened on the third retracement candle, right? Sorry, if this happened on the second retracement candle and this happened to be the third retracement candle, I'm not using the second retracement candle. I'm using the third one because the third one has given me more of an accurate reading. Even if price decides to, shoot off from that area, it is what it is. My directional bias was correct. At the end of the day, it's all about probability and how much you can actually save. When I say save, I don't mean how much risk can I take less? Go ahead, CZ.
Thank you.
But Brian flips the whole swing, no matter which candle is which. He goes from the bottom to the top.
Not all the time. Not all the time. And also, if he's got funky candles or funky wicks, he also don't take them. Brian's very selective when it comes to picking out his candles. He just don't show you all the time.
Okay. I have to ask him about that because I've just seen him flip the whole swing from bottom to top.
From where to where? From here to here? Or from the actual, after the second retracement?
Well, he waits until the second candle. There has to be a minimum of 2 candles on the pullback.
Yep.
But he feels whatever that low is from that pullback to the high of that pullback.
Yeah, so if it's something like, okay, if it's a small, how do I, let me see if I, okay, let me see if I can, okay, for example, if it's something like this, for example, right, and this is where price stopped at. As I said, the distance between this and this candle here is not much. So I've seen Brian do this plenty of time, and I also do it as well. What I'm saying is, if you've got a massive wick like that, Brian ain't taking that one. I know that for a fact Brian ain't taking that one because it don't make no sense to take that one. Brian will definitely wait for another candle to form or simply just not take it because of the kind of candle that's formed. Because the distance now between this wick here and the actual where the second body is, that's a lot of pips.
Right.
And on top of that, when you draw fibs now, right, from here to here, or wherever the high was, so even here, for example, right, in this case, let me do it, so from here to here, in this case, by the time you go to your entry time frame, look at where the body is of this candle that technically has given us a break of the 61.8. It is flown way past the 61.8. So what you're going to have to do is, at that point, wait for price to come back down and form some sort of structure before going back up and then waiting for the break of the 61.8. At that point, it's already messy because there's no guarantee for price to do any of that and go in our direction.
Mm.
Does that make sense?
Yeah, it makes sense. I just wouldn't trade that pair because of the way them candles look.
Exactly that. And that's why I say you got to be very selective. If the distance isn't that much, in this case, like this between here and here, you can still take it. You just have to be very selective. But if it's, for example, like this, for example, here, right? The distance between here and the actual retracement, where the retracement began, which is from here to here, that's a big distance. Also, the way the candles are positioned is also off as well. So I wouldn't even dare to I wouldn't even dare to do that. Like I said, look how I said, guys. You know when I said price can easily come way past below the 0% mark and still go down to a negative 27. As I said, it can still do that. Price clearly still wants to push back down to that area, right? So there's a potential that price can still do that. But as I said, going back to the daily, yeah, I wouldn't even dare do that because the distance between the bottom of this wick here, the retracement ended over here with this candle. So the distance between here and here, that's a big distance. You would go here. Now this is where we actually managed to get our entry anyways, as I said. We had our entry on Friday. Because it was Friday, you didn't want to take it. Because otherwise you're going to have to hold over the weekend. So you wait till Monday, you got our entries on Monday, and price smacked our TP. 1 day, 8 hours. Simple. You just got to be very selective and essentially trade what you want to trade. As simple as that. News. Let me not forget about that. How long have you been on this for? 1 hour and a half. Not bad. Cool. Let me know if you can see my screen. You guys see my screen?
The new screen, yes.
Yeah, perfect. Just making sure. All right, cool. Yeah, so for news, I hope A2 is still here, by the way. She's still here? Yeah, she's still here. Cool. Yeah, so for news, the way I see it and the way I view it, I don't pay attention to nothing unless it's red folder news. If it's not red folder news, I don't want to look at it. And on top of that, I also don't pay attention to it too tough. Let me just put it like that, right? Because I'm not stressing about it. If it news doesn't change the direction in which a trade wants to go. If price wants to go a certain direction, news is the only thing that is going to amplify it. The market will already show you where price wants to go. News just amplifies it to go in that given direction. It's as simple as that. So if you're on the right side of a setup and you have news coming out, especially red folder news, it's only going to amplify your trade in order for it to hit TP much quicker, depending on where TP is and all of this different factors, right? It's as simple as that. If you're in a wrong trade, you're gonna get wiped out very, very quickly. So for me, the only way that I look at news, and I got a video on this as well on YouTube, by the way, but the only way I look at news when it comes to red folders, because those are the most high impact. Of course, you know, price can move with like an orange folder. I'll be very real, but I don't really pay attention to it. It's just red folders that I only care about. Now, you can see the currency here. You got the time zones and everything. The next news that's actually going to come out is for NZD. So any pair beginning with NZD or ending with NZD, anything that has NZD in it is going to be affected, or any other pair that is also, somewhat correlated in that aspect. For NZD, because it's New Zealand, I would also say AUD would also have some sort of impact. It might not have the same impact as NZD will, but AUD, which is obviously Australian dollar, can and potentially will have some sort of impact on it, because New Zealand and New Zealand and Australia are technically next door neighbors, right? So if you notice that, you'll notice that again, especially when this one comes out. But in this case, we're just focusing on, let's just focus on USD, for example, right? So with USD, the way I see this is, I just look at any of these numbers, right? The numbers, there's always going to be a previous and there's always going to be a forecast. The forecast is obviously what is expected to come out when news comes out, right? And then we've got the actual, which is the actual numbers. Now, the actual, if it's green, it means that it's good, it's positive, because it has either come out to be the exact same number they expected or greater. In this case, as you can see, the forecast is 1.0% in terms of the employment cost index, but the actual was 1.2%, meaning it's 0.2% higher than what the forecast was. That means for the US economy, it's greater. It's basically beneficial for the US economy. In this case, any pair that has a USD in it, it's going to go up, depending on which pair you're choosing, right? Because you've got primary pairs and you've got secondary pairs. If we're talking UJ, for example, in this case, and I want to find this before I even show you, because I haven't actually checked it, but if we're talking UJ, for example, right? What time was that? What time did the news come out that day? That was literally today, right? And that was at 1 o'clock. What time did that news come out? That came out 1:30. Okay, perfect. Now I'll show you from here. How do I share my screen again? I'm sure you can share your screen, multiple screens at once. I don't know why I keep doing this. Okay, here, for example, right? Now, this is New York Open. This candle here. This is on a 1 hour time frame. Let's see if I go on the 15. Perfect, here. So you can see it better, right? Now, depending on which red folder news candle that's not news candle, but depending on what red folder news you have, because you have different ones. You have like, cost of employment, or employment cost, as I just said. You have consumer confidence. You have unemployment rate. You have CPI. You have what else you have? You have NFP. You have various different ones, right? But anything red folder is a high impact, and obviously, depending on which ones that I just mentioned, could also be like double, triple, one of the other. They will have different actions. So in this case, where we had the USD news that just came out at literally 30 minutes, actually not even 30 minutes, literally on the dot of New York session, price for US economy for that news specifically was positive. In other words, anything beginning with USD, which is literally a primary pair, in this case, we're talking about UJ. USD in UJ, as in USD JPY, the USD is the primary pair. The JPY becomes a secondary pair. So anything beginning with USD, and this goes for any other pair beginning with USD, USD means the primary pair means it's going to shoot up if it begins with a USD, right? In this case, as you can see, 130, this is 115. Literally, this candle here is the candle that decided to shoot up. And ever since then, prices continuously decide to shoot up, right? But that one candle that was formed, because if you think about it, this one candle is actually bigger than all of these. But as I said, depending on which red folder news you get, on depending on which pair as well. If it was NFP, for example, and this was the same news that we're talking about, if it was NFP, you would have seen a bigger candle. And this is on a 15-minute time frame, by the way. So on a 1 hour time frame, that candle looks like this. If it was on a 1 hour time frame and we had NFP news that came out positive for the US economy, that NFP candle would have been a big ass candle like this at some point if it decided to close like that, right? Or you might have just seen a massive candle like that and then a major wick like here, for example, right? You might have just seen something like that. Well, it all depends. But that's the difference between a primary pair and a secondary pair. So if we had a pair like NZD USD, for example, it would be the opposite. Why? Because actually, no, it wouldn't be the opposite because technically in this case, it's tricky because technically in this case, because the USD is actually the secondary pair, the USD should drop, but because the USD news came out positive, but at the same time the USD is actually the secondary pair in NZD USD, it's not going to rise up as much as it should if the USD was a positive, if the USD was a primary pair. So as you can see, if I go to that 130, what did price do? Price actually dropped in the opposite direction, right? Because the USD in this case was a secondary pair. Now it should have decided to continuously go up, right? Even if it didn't match what we just saw in UJ, but as you can see, price dropped literally at the same time. But price tried to come back up and struggled to come back up, right? The price decided to continuously go down. The only reason why price decided to continuously do that is because at this same point, basically what we're saying is the New Zealand dollar is weaker than the US dollar, which is technically correct because think about it. If we just had positive news for USD, basically saying that the US dollar is stronger, just in this very moment in time, not overall, but just in this very moment in time, we are correct, which is why you saw UJ decide to climb. UJ with USD beginning with the USD, that's why it decided to climb. And then you also have, as I said, any pair that ends in USD is gonna drop because you're saying that basically the US dollar is stronger than the NZD. So that means we are going to sell the NZD against the US dollar. I'll give you another example. I know GU also dropped. Same shit. GU dropped as well, right? 15-minute time frame. Where is it? This candle here, right? Because the USD is the secondary pair. If you know the difference between the primary pair and the secondary pair, you can go a long way as long as you are on the right side of that trade. If you are selling these pairs, well, it depends on which one you were selling. But if you were selling GU, for example, just before before news came out, you would have made, okay, even from this drop, I'll show you till now, basically, right? That would have been a good on GU. It would have been small. It would have been like 50 pips. But again, it depends on which pair because 50 pips on GU could also be equivalent of 500 pips on or 5,000 pips on like US 30 or 500 pips on US 30 and 5,000 pips on gold, for example. So it's all relative. But that is how I use news. I don't try and second guess it. I don't do any of that. If news wants to strike me out, it strikes me out. But if I'm already in a trade, I should already be at break even before news hits. And if I'm not, I'm actually monitoring it because price will give you a countdown basically before news hits. And it would actually tell you pending. Then as soon as news hits, you can tell the numbers. Like if it's red and I'm expecting it to be red for my trade, then I know, okay, if red means that it's in line with my setup, I'm golden, I'm good. But if it's green and I'm expecting it to be red for my setup, I'm out of the trade. Like the button is right there, I'm out. So that's how I would use it. Other people use it different ways. I don't read any of the sentiments that they've got going on. I don't read any of this. I'll show you. I know some people read all of this, information that's there. You can do it if you want to. The only thing I read from here is literally where it says actual greater than forecast is good for currency. That is the only thing I read because it tells me what I need to know before these numbers come out. Like this one here, for example, actual greater than forecast is good for currency, right? I know, okay, if it's greater than 104, US is going to continuously, the US economy is going to continuously, sorry, I said the US economy, the US dollar is going to continuously fly. But it didn't in this case. It did the first hour and a half, but the other hour and a half it didn't, right? Even this one, for example, because there's another one that will tell you different. That says greater here. The other one says actual less than forecast is good for currency. So greater doesn't always mean good for currency. It just depends on. Greater doesn't always mean it's good for the currency. It literally depends on the type of news that you receive. Unemployment rate. There is no way that unemployment rate can have actual greater than currency. Actual greater than forecast is good for the currency. That's not good. The unemployment rate needs to be less for it to be good for the economy. That means that they're doing something good. There's not going to be many people that are unemployed. I don't want to get too much into that. But do you know what I'm saying? So that's the only thing I read. After that, I don't need to worry about anything else because I should already be on the right side of the trade. Point blank period is as simple as that. Let me go to the chat. There's a lot of questions. Damn. Name of indicator, please. The name of the indicator that I was using was called Williams Fractals. I'm an hour late to read this as well. I just showed you that. Yep. He's lagging. We're talking about Elliott Wave. Elliott Wave. No, Elliott Wave is something completely different. I'm not even gonna get into Elliott Wave. Elliott Wave. If you want to get into Elliott Wave, that's a whole different concept. That's more to do with like the SMC traders. So yeah, I'm not about to get involved with any of that. Because that's a whole. But yeah, you are right in terms of like point A, point B, point C. Technically, it is from Elliott Wave, but it's as simple as just. Give me a sec. Let me see if I can point it out here because they actually have. When I said point A, point B, point C, so you've got these Elliott Wave corrections or Elliott Wave triangle wave. Yeah, so literally it's this one here actually. Yeah, you're right. It is actually Elliott Wave. So yeah, so point A, point B, point C. Yeah, that's what I was talking about when I mentioned that. So that's that. I was looking at GBPNZD, but it did not type me in. It went without me. Yep, I told you about that one as well. Literally broke above the 61.8, but there's no way for you to enter because the next candle literally just broke above the 38.2. So there's nothing there's nothing you can do. But as I said, some people like to enter early. Like some people, instead of setting buy limits, people love to put buy stops, and I've seen that mess a lot of people up. Can you look at oil, please? Let me check oil real quick. Yeah, see with oil, this is why I'm perfect for saying that actually, because I took this setup and I'll be very real, I got stopped out. Now, the only reason I did get stopped out, and as I can see now, price, again, these areas, they're not 100% accurate. No area is going to be 100% accurate. It's all visualization at the end of the day, right? Now, if we're talking UK oil and US oil, because technically they are similar in a way, one of them is slower than the other, but they are, if one drops, the other one's going to drop as well. As you can see here, this one nearly got to this resistance area, but then I have a resistance area over here, which price never got to, but price still dropped, right? So for me, I did take this trade last week as well, and I got out about here when price got to this level, and I got out there because it was on a Friday, and I said, yeah, I'm done. My stupid ass decided to get in again, and I always tell myself, I want fresh setups because of stuff like this. I was in profit. I was in good profit, and that same profit that I was in, I gave it back to the market. Now that was stupid of me because I was thinking, okay, do you know what? Because we're on a weekly time frame, higher time frame is king. Doesn't make a difference. We haven't actually broken above the area where I said, you know, this is where we're going to break even, but I'm still going to take this setup kind of thing because we are technically there's still a chance for us to get involved, and technically we're still bullish as well. That's not what happened. Price decided to come back down this way, and it is where it is. Now we've got 3 days to see what price does. If price decides to close below this area, I'm going to keep it there, and I'm actually going to get rid of these boxes. If price decides to break below these areas, well, yeah, we've got 3 days, as I said. If it breaks below this area, then so be it. But price could get to about this area here. One thing I want to do is, yeah, this area here, for example. Price could get to about this area here, right? Which lines up with the fractal. I don't need to cover the whole fractal at this point because I know that there's structure in this area. Price could get to this area here and then decide to continue upwards if it wants to do that, right? But at this point, I'm not even looking at oil no more, and I don't need to analyze it. But yeah, last week it was bullish. Right now, it doesn't want to be bullish right now. So I'm scrapping UK oil as it is. Forget about that one. So the last part, I probably went over that already. Do I do one?
Richie, sorry, are you able to look at a USD card, please? Because I'm in that trade right now. But
how are you in it already?
Yeah, I'm in that one.
How are you in that trade already, bro?
Yeah, so the thing is, when do you know, like when because sometimes it doesn't hit TP, so at some point it turns around. So how do you tell looking at structure that?
So that's why you were here from the beginning. That's why I always mark up when I do my zones. So before I even find my setups or before I even decide to look for entries, I mark up where price is at. Have I broken structure to the upside? Is price bullish? Is price bearish? Am I taking a reversal setup? I look at things like that, and no matter which setup I take, I always try and find the nearest weekly or monthly resistance zone to the top and to the bottom, right? Depending if I'm buying or selling. Because USD CAD was bullish, I am looking for the next weekly resistance area or monthly resistance area, depending on which one I can see first, right? In this case, I'm on a weekly time frame, right? So this would be the next resistance area in terms of where our TP is going to be. So because we're targeting negative 27, right? And that's our TP, the negative 27. Where's the resistance area? And where's the TP? The TP is above the resistance area, right? So what I will do is, even if I'm in this trade, and I'm not in it because I didn't get tagged in, I don't know how you're in it, but in this case, because our TP is all the way here, when price gets to this resistance area that is just drew, which is here, I would be very, very cautious. I will look at the time, I will look at the dates as to when price gets to that area. Today is Tuesday. If USD CAD decides to continue flying up, right, and it gets to this resistance area by Thursday, you've got two options. You can either take everything because you know it's at a resistance zone and you know that there's a possibility of price doing this, for example, right? Meaning all of that profit that you were in, even if you were break even, all of that profit that you were in, that you could have cashed out, that you could have taken partials, you've lost everything, right? Because you didn't take action in yourself. You wanted price to hit TP, and price won't always hit TP, right? Or as much as we want it to. So if you know that price gets there to that level on Thursday, as I said, you can hold, and hopefully by Friday New York session, right, or London New York session crossover, we get a massive influx of volume. Or let's just say USD news comes out again, because I know we've got crazy USD news this week, and we just have crazy new USD news that's positive, and USD is just flying. That is the only thing that is going to stop you. So that's the only thing that's going to help you in this case, But if there's nothing, like if there's small volume and price gets to this area here on Friday and you still haven't closed, it's on you. Do you understand what I'm saying? That's how I identify whether, should I get out before price hits my TP or not? EuroCAD, as I showed you, EuroCAD, as I showed you, right? Where was the weekly? That was a daily setup. Yeah. So where was the weekly resistance? Weekly resistance is literally where is literally below our TP. But where did price get to before it just rejected? It hit that weekly resistance area and created that rejection. Do you see what I mean?
Yeah, I get, it's more clear. I don't know how I missed it before, but so basically just look for the weekly and see where resistance
Weekly
is
or
at.
monthly, because sometimes the weekly isn't clear.
Oh, okay.
Yeah. In this case, with USD CAD, for example, we attempted to have a swing setup on a daily, but now we have a swing setup on a weekly. But technically, both timeframes are bullish anyway, so it doesn't really matter if you enter on the daily or the 4 hour. This is the only cleanest pair like that I've seen all year that you can actually enter from both timeframes. Even though the daily, obviously, as you can see, the daily swing has been invalidated because now we have all of these bunch of different colors, after the retracement. But as I said, because price is still bullish, it's the only setup that I've seen all year that you can enter from a weekly setup, entering on a daily, or entering on a 4 hour from a daily setup. This is the only pair that I've seen. I don't know how you got in on this trade. Well done to you. Maybe you had your entry all the way up here. I haven't been tagged in yet. And price is literally closing above the 38.2 now. So if you are in this trade, move your stop loss to break even now. Yeah?
Thank you, bro. Thank
No
you.
worries. Do I do one-to-ones? DM me. You doing awesome. Can you share your fib settings again? Yep, I'll show you that real quick. Let me get a blank one. Cool. Let me get rid of these ones because I also drew this. Cool. So the fib settings are literally here. So it is extend lines to right. I get rid of that trend line. This box, I get rid of that. I just leave everything as it is. And then it's a 0, a 38, 0.382, 0.618, a 1, a negative 0.27, and a 0.88. Take a screenshot. Yeah, that's it. And then choose whatever colors you want. I just keep mine simple. I just got an alert. I'll check that out later. Actually, I can check it now in front of you guys. I'm cool. That life is a bitch. I'm sorry for my language, guys. You know how long I was waiting for this US 30 trade? And price is taking off without me. I don't know how I missed that. So, that's why. No, it's on a daily time frame. Sorry. I thought it was a 4 hour. Yeah. Okay, so I'm good now. So I got my break.
You, bro. Watch your mouth, bro.
I was gonna bug out.
Life is
I'm
good,
gonna
you
take
know.
my time with that one. I'm not 100% on that one. I'm gonna take my time with that one. Let me not fumble the bag right now. Yeah, I was looking. Yeah, I know what I'm doing with that one. So ignore that one. Ignore that one, guys. Glad it's recording. Yeah, it's got its recording. This is like 2 hours long. I'm also gonna post it on the YouTube as well, by the way. So so you guys can go back and watch it if you need to. Yeah, but he said his entry last night at London, and he never done that. Something new. You sure? So she off the goal yesterday.
Richie.
No. What up? Who's that? Yeah, your mic is echoing. You better type, boy. News adds volume. Yeah, we already know that, bruv. I didn't understand anything about the fib placement. Now I'm super confused. Legit. Do we put the fib from the high to the low? I'm not sure if I answered this already because I'm just going over the thing now. But
Nah, I don't think so, bro.
But I will, bro. You just joined, so I don't know.
Yo, I got trouble.
But I will go over it again. Right? There is no. Hold on. Let me read this properly because.
Can you hear me again, bro?
Yeah, I can hear you.
Yeah, sorry about that. I was wondering, what was your Williams fractals period? By 2 or
I just did a 2. Yeah, literally a 2.
All right, cool, sweet, thanks.
No worries. And if you want to change it, no, so not change it, but if you want to, because sometimes it's a bit too much noise. So if you want to take it off, take off the time frames. So what you can do, you click on settings and you go to visibility, and let's get rid of it on the minutes and on the seconds. It's too much. But remember, when you get on smaller time frames, you're gonna have more candles. So anything from hours to months, it's okay. But once you start getting to minutes, you're gonna have a bunch of squares plus triangles all over the place. So just be careful.
All right, sweet, thanks.
No worries. Yeah, maybe just properly, Bob. I didn't understand anything about the fib placement. Now I'm super confused. Legit, do we put the fib from the high to the low of the retracement, or do we put it on the high and low of the actual retrace? Bro just said the same thing twice. Okay, I know what you're talking about as well, though. Yeah, you just put it from the high or low of the retracement. Okay, for example, here, this is a perfect candle in it as well, by the way, because technically this blue candle is a retracement. If we're talking impulse from here to here, which is these two black candles, that blue candle is a retracement. You don't want to put your retrace the bottom of your or the top of your retracement, wherever the 100% mark is. You don't want to put your the retracement at the top of that blue candle, because that's not the retracement. Remember, you're on a daily time frame. Sorry, this is a weekly time frame. So if you're on a daily time frame, this candle that just wicked past the retracement candle, which is this blue candle, in between here and here, you're going to have a bunch of other different candles. Like that. In this case, you just have one candle because we're on a daily time frame. That is a prime example as to why you would use the candle, the wick, whichever one is the highest or the lowest, and if you're buying or selling, or depending on which way you're putting your fib, right, you would put it at that point, basically, right? Because this candle is technically the end of, because this is the opposite color of this color, this is the retracement. Now this candle is actually the candle that has ended the retracement. So if you get a candle that ends the retracement, but the wick of the candle that ends the retracement is higher or lower, depending if it's up or down, that is the candle that you put your retracement on, or whether whether it's the 100% fib or whether it's the 0% fib, doesn't really make a difference at this point, because it only depends if you're buying or selling. That is where you put your fib. It is straightforward and simple. It's not rocket science. Just look at what I've done. If you still don't understand, go back and watch it again. It's not rocket science. Simple. Right? But that is what I'm telling you here is just because, again, we only care about the next wave, the next impulse. The normal way to draw a fib is literally from here to here, which is where you can see the fractals. That is literally the normal way to draw a fib, from here, from the top there to the bottom here. That is a normal way. But we want to get involved with the next impulse, so we adjust our fib. That's probably why you're confused, because you're probably thinking, what the hell am I doing? It's part of the strategy. Yeah, I just explained that. Yeah, I just explained that. No, I don't. I'm not new to MC. It just got me very confused. Need a deeper explanation. Yeah, I just explained that. I can drop Swaggy C Fibonacci videos if you want, but Richie got we upload the webinar. Yeah, as I said, it will be on the YouTube. Richie or someone. Richie. No answer that. The setups. Damn, these guys are still going. Are there any setups you are looking at for the remainder of the week? Since you asked that question, so I'm gonna leave those because I want to do a recap when the week is done. This one, Euro CHF, This was a good one, by the way. Now, the only other thing that I didn't like about it is ignore this area here. The only other thing I didn't like about it is the fact that we have this weekly resistance area exactly sitting right here. That's the only other thing that I didn't like about it. And what I said was you can buy into a resistance area, but don't buy whilst you're in a resistance area. So technically, when we had our break of break of the 61.8, we can buy into it, but since we're in it, where's the rest of the buying power? Right now, as we speak, potentially, as you can see, price nearly got to our TP, but right now, as we speak, we could actually be heading downwards. In this case, you could probably end up seeing a intraday EMC, an intraday EMC on this pair, probably New York session, because we are in a resistance area, right? Unless price decides to break out of this resistance area to the top, to the upside, then I'd be surprised. But as of now, we're in a resistance area on the weekly time frame. I don't even need to go to the monthly to know that, because again, even the monthly, as you can see, right? Now, the only other thing with the monthly, actually, the only thing I liked about it is the fact that we have this area here, right? So, in other words, if you think about it, if you guys want to think about like W formations, which is like here, for example, it's all about visualizations. If you want to see a W formation like that, you already know by the time it comes back down, it's going to retest the neckline, which is exactly what it did here to go higher, right? Now, you've got a, after that W formation has been formed, now guess what? You've got a inverted, actually, no, it's not inverted. You've actually got a head and shoulders, right? And then what happens after you have a head and shoulders? Comes back down to retest the neckline to go higher, right? So that's probably what could happen with this pair. But as of now, as I said, in terms of like EMC setups and whatnot, that was the only other pair that I was hesitant to take because of that resistance area. But if you're in that one and you took it, you should be at break even now and consider either closing the actual trade itself or just letting it ride. Totally up to you. No Diddy, by the way.
Yo, no DD.
No Diddy for real, for real. Cool. Let me go over the next ones. AUDCHF. I'm not gonna. I'm gonna wait. I'm only gonna look at anything that has got a second retracement candle. That's the only other thing. Anything with JPY, I am not even bothered to look at it because of the wicks that were formed just now. And that guy that just asked me about the wick, right? I forgot your name. I think his name was Aaron. In this case, with a candle like this, you cannot put that and that. You cannot do that. Because by the time you come here, you're going to say, this is your break. If you're talking EMC, if you're going to say, this is your break. And then that was your retest, but then price is going to continue going down. That is not a very good practice to do that in the first place anyway. So at this point, what you do is your second retracement candle, which is here, right? At this point, price is more than likely, this blue candle that's being formed now, price probably come back down again to retest maybe this area. So that's what I would look for when I see candles like this. So JPY right now, I can flag up, but I am not interested in taking this pair anytime soon, right? And I can go to the weekly time frame, and I think we are even weekly time frame, like weekly time frame, I can see these dotted lines right now. We are in, and I know this is all the way in 2014, but it's still relevant in terms of where structure is. Guess what? We are still above that area on a weekly time frame, right? So as long as price holds this area and doesn't close below another, I know this candle closed a little bit. Technically, I'm not counting that, right? Because of where price is at and this huge wick. That's a minor close below. I actually want to see like majority body close. That's minor. So if we get another daily candle that closes below, yeah, I'm no longer looking for the setup. Then I would look for a bearish setup, or at least I would look for another bullish setup, maybe the following week. But as of now, I can mark it down and maybe look at it, but I'm not too fussed about it. Like, it is what it is. CAD JPY, that can even give you some sort of confluence. There's nothing to mark here with this one specifically, but this might give you confluence, because when I see price like this happen, especially with a doji like that, price will probably give you another bearish candle. So that might give us a third retracement candle for AUD JPY, which If it does, we already know we're no longer taking buys for it. So we'll see what happens. And then CHF JPY, same thing really. Like, look at where price is at right now. Just these candles alone, I'm not liking any of them. So I'm not going to be in a rush to take any of it just because we've got a second retracement candle. Nah, it's deeper than that. So yeah, up to you guys. I mean, technically we are above it. Like, I can mark it up properly, for example, right? So we've got this area here. I can drag across. Technically, I want these areas here because this is what this price actually broke above this area here. So I'll take, instead of just that one there, because I already know that's a full-on break. Just for demonstration purposes, what I can do is I can do that, right? I know that that is the most recent break we had, but these highs were also broken as well. So I'll take the highest point, which technically is this one here. That's the highest point, right? So as long as price, even if price breaks below this one, for example, price breaks below this box, I still have this one to maintain. If price holds this one, we could still be going bullish. If it breaks below this second one, yeah, like, we're done for. We're going bearish, right? Because also don't forget CHF we are also in we are also bullish in CHF as well. As you can see, we've got this massive wick that we just had from this area here that was just formed. And then on top of that, we also have this area over here. Just mark this out, which is where price is sitting at right now. So, you know, I don't really need to mark it because there's nothing on the left hand side. So yeah, we're bullish overall on that. But again, the candlesticks that are being formed, it's just some weird ass candlesticks. So I'm gonna hold and wait. Right now, if you wanted to mark it, you could do that and just wait. Where was it? Yeah, so the bottom of the, see, look at that. It's weird. Like, even where the candle placements are, we have this massive wick here. You're not gonna do that one because that's just odd, right? Because it's one retracement candle. This is the second retracement candle. Let me get rid of the red boxes so you can see. So the bottom of the retracement is literally here from this candle. So now what price has done is price has done this. So it's creating structure, but I want to see this high, which is where we got the fractal, which is good. I want to see that high being broken. If it breaks that, then also give us a 61.8. Then maybe I'll be looking at it, depending on what day is giving us that break. If it doesn't by Friday, I'm not even bothered about it because I know I got Monday coming and I'm gonna find better setups than this one. That's why you got to be picky with the kind of setups that you've got that you pick, right? Visualization. Just remember that. It's gonna go a long way. So CHF JPY, AUD JPY, if you want to. That retracement is crazy. So I'm maybe looking at that one anyways because we don't have a second retracement candle. Euro JPY, there's nothing there for me to look at. Euro USD, there's nothing there for me to look at. Nothing there to look at. CHF JPY, nothing there. Nothing there. Nothing there. That's the second retracement candle that's being formed. Actually, no, this one just closed. This is Japan 225, so it's basically like US 30, but the Japanese index basically. But as you can see, we didn't get a close above it, so I'm not marking that one. And then we've got sorry, I just had to check the screen, make sure it's screen recording. Or you guys can see my screen. Because imagine if I was talking all of that and you guys couldn't see my shit. Imagine, exactly, bro. Okay, NZD/JPY. I guess you can put it in the same boat, like I said about all the other ones. But then again, look, like, you've got this area here that just broke above and broke back down below. But we also have the very first area that it broke, so it could come back down to that area if it does. Weekly time frame. The weekly time frame is the only thing that would also give me like, okay, maybe I can take this setup. If the weekly doesn't match out with it, 100%, I'm not taking it, right? Now the weekly time frame, I think I analyzed this earlier before the market closed. Weekly time frame, boom. Nope, that was the wrong zone I was looking at. Let's do this. Yeah, this is what I was looking at. Right? That weekly time frame is all the way up here. Now, technically, we're nowhere near it, right? Because this is all the way at the top over here. And I don't know what time that was from. That was probably from like, yeah, 2007. So it's all the way. It is irrelevant, right, in terms of right now. But at the same time, remember when you find a setup, where's your nearest resistance and support zones in terms of where you're targeting? It is way up there. So I'm not concerned about it if we were going bullish, right? Monthly time frame, we're talking monthly. Monthly is literally right here, right now, which is technically we have a support area here, which price is bouncing off of right now, which is what gave us that bullish sentiment in the first place. And then we've also got a resistance area over here now, which is why price is rejecting. Come on, bro. I don't care. There, right? And as you can see, price didn't get too far with that resistance zone that I literally just drew now. So ignore this one here because that's not where price is at right now. Price is literally here, right this second, right now, right? This red one. So that's why price is now giving us that rejection zone in the first place. So you've got two options in this case. If we do get a second retracement candle to this, or third one, sorry, to this area, guess what? Let's just imagine there's a third retracement candle here to here. Where's our TP? TP is all the way here. Now this target here isn't a problem, but this barrier, this resistance zone that we just got just now is the problem. What's the likelihood of price breaking above that area, right? To break above the 61.8 to now give us our entry to go higher. More than likely, it's going to be very hard because you've got to think about it. In order to do that, we have to break barriers. In order to break barriers, we have to have our entry and our TP either after the barrier or before the barrier. You can't have it both. You can't have it, one or the other. In this case, we have it one or the other, so it's more than likely not going to happen that way. So with this pair specifically, NZD-JPY, in terms of actual entries, because again, I'm not saying it can't go higher, but I'm talking entries. It's harder to get an entry on NZD-JPY compared to the other JPY pairs that I just showed you. So this one is a no-no. I'm not even bothering looking at it. NZD-USD, nothing there. SPX, nothing there. UK 100. We could look at something here. Let's see. I want to check something real quick. Yeah, UK 100 all-time highs. Like, there ain't no coming down from this one here. So UK 100. Though I don't have my fractals, this is the last fractal, but I know that this black candle here structure, and you know that because you can use the line tool, as you can see, up, down. So the structure there. So I could, if I wanted to, boom, boom, on a daily time frame, right? And then I could do impulse from the black candle, or in this case, because technically the black candle lines up with the blue candle, and there's not much of a lower wick. You can do it from the blue candle, or whatever you want to do. In this case, it will be from this second retracement candle. And price has touched it now. Price hasn't opened for it just yet. But at the same time, because these retracement candles are pretty small, I want to see the third candle come back through. The third candle doesn't have to close because we've already got two minimum, but I want to see a third candle at least come through and take out one of these lows. Now, I'm only saying that so that I can place my fib much lower than this low, right? Than the second retracement candle low. If it comes down to about this area here, oh, I'm golden. It just means that it gives room to allow for that break and retest of the 61.8. When you have a tight retracement, it's pretty difficult in order for price to break the 61.8 and actually come back and fill that gap that it's created, right? That's the difference between having a tight retracement and having a decent retracement. But again, if you guys want to take UK 100, you can. We are bullish. We already know that because the last resistance area was here on the weekly time frame, and we are way past that now. And it's also at all-time highs. Don't even need to go to the monthly, but as you can see, monthly we are still all-time highs anyways. And that monthly resistance, which is this massive wick here, we are way above it. So that's solid right there, right? So I'm going to put that on my list as well. These are daily swings, by the way, right? I'm not giving you guys no intradays, no weekly swings. Well, I'm giving you that. USD JPY, forget about it. That's whack. That is whack. So I'm not taking that one. US oil, forget about it. This is silver, forget about it. And that is literally it. So let me finish these questions because I've been talking, bro. And I'm not gonna take this mask off. And I don't have a straw to put. Let me be careful my choice of words. I don't have a straw to have a beverage. But bro, I feel like I've been walking on the Sahara Desert for like 60 days right now. What was that? Yes, for 1-to-1. DM me. I don't bless the Blessed Hope. I don't think I've seen that name before. Just DM me. I'm sure you have me on the live lab, so just DM me. So I don't think I've seen your name before. Scroll down. Yep, scrolling down. Life's good. You have broken reads test and took off. Yep. Okay, explain. Yep. New coach on deck. Be the new coach on the. So the wick of the candle that ended the retracement is where you want to place our fibs. Literally there. It depends because remember, not all the time does that happen. If you get a scenario where the end of the candle that caused the end of the retracement, that candle, if it wicks higher or lower, depending if it's a buy or sell, if it wicks higher or lower than the actual last candle of the retracement, then yeah, you would use the highest point of the wick that is formed in that area, right? Between the two candles, basically. It just depends. Not you're not always gonna get that scenario. Sometimes, literally, the last candle that forms the retracement, not the opposite color candle, but the actual last color candle that forms the retracement, sometimes that becomes the highest point, and that's what you use. You just have to adjust because remember, you're not always, the market is never perfect. You will never get the same entry twice, and you will never get the same sort of setup twice on that same pair, because you can get the same setup in a row in a day, but you won't get the same setup in a day on the same pair. Like, so you just got to adjust and adapt. As simple as that. Do you have any videos you can YouTube on how to use fractals? Yeah, I do. I'll repost it again because I actually posted it in the lab. In terms of like how to identify structure, and fractals was actually one of them. So I'll just repost the same post again. It's going through. Yes, that little tweak on the fib makes so much difference. I've been marking up the charts whilst you talk, and I see why I miss some of the EMC setups. Literally, and on top of that, another little thing that some of you guys don't know: use your damn magnets. The magnet is literally right here on the left hand side. Right, you can see the magnet tool. Click on it and use the weak magnet. Don't use the strong one because it's gonna pull your hair off. But use the weak magnet, and there's no way you can adjust your fibs the wrong way. Because when you're using a magnet, it is literally you just move your cursor and you snap it to either the end of the body, the top of the body, the end of the wick on either side. It is as simple as that, right? Once you use the magnet, I promise you, it changes your life, because then you don't have to be doing trying to zoom in and make sure that that line sits exactly where the bottom of the wick is. No, like I see so many people put charts up, and I've got a pet peeve because it's like, for me, it's like OCD. It needs to snap onto the wick. That is the point where, that's the difference between 1 or 2 pips. If you are literally 1 or 2 millimeters out, you are gonna mess up. It's as simple as that. Like, that's the difference between having 1 or 2 pips out of price hitting your entry point because you didn't have you didn't have a proper entry, or you didn't draw your fib properly, or maybe you didn't get the alert you wanted because you are 1 or 2 pips away because you didn't have the alert line exactly where the 61.8 was because you had your fib the wrong way, or you had your fib off slightly. The little differences make trust me, those little differences add up, and it helps you or ruins you depending on how you want to use it and how you want to take it. So, which is the low or the high that ended the fib? I mean retracement. I don't know for which pair you were talking about, bro. Is that Jay? Jay, was that you that answered that question?
Yeah, what going, bro?
You said which is the high or low that ended the fib?
Yeah.
Which pair was that for, bro?
I was talking to that man, bro.
Okay, don't worry. Cool. Yeah, I can see and understand the EMC a lot better than before because I was missing a lot of entry. Yeah, there we go. Do you do weekly recap all the time? I don't. This week, I will definitely put up a YouTube for weekly recap. I do weekly analysis before the day starts, like before the trading week starts, but I don't usually do recaps. But this week, I'll do a recap for sure. And I'll upload this one up as well. Never heard of it all my years. Trading to use the magnet. Oh my god. It's like
She said, wait, traders how you
yeah. So I'm gonna do another video about backtesting as well. I'll do another video with backtesting using the fractals. Basically, I'll just do a backtesting session, which is like how I trade EMC, and it will show you all the statistics at the end of it, percentage win rates, percentage return rates as well, the days a week that you're profitable in, which months you're profitable in, which years, all of that jazz. So that's gonna take a while, but I'll do that. And that's all good, bro. Sorry, I said his name was Aaron. Aaron, I hope I answered your question, bro, in terms of the direction of the fibs, because I know you said I confused you. Yeah. Okay. Perfect. Cool. Because the last 2 weeks has been horrible. Last 2 weeks of EMC has been trash. So this week, I'm glad that there's technically GBP and ZD doesn't count, but I'm glad that 2 of them have actually hit TP, and that is EuroCAD and gold. Those are the only 2 swing pairs. And you got Euro CHF as well, which is on the way, but I don't know about it. So that might be free. But you could say 2 out of 3 so far have hit TP. So I'm actually glad because last 2 weeks, it's been horrible. And I'm still going. Like it's Tuesday. Hit two trades hit TP in one day. Come on. Drop your Notion. Yeah, no, I'll put my Notion in. I'll drop it in the lab. What time do you look for entry on your swing? First 4 hours of Asian session. How about that? That's if I want to enter manually, like I said. But yeah, if it's 1 hour and price is near my entry and spreads are low, I'll put an order limit. It is what it is. But as I said, like it can't. Don't even bother putting order limits, and don't even bother doing manual enters if price is near that area, or if its price is already at the area and spreads are high as hell. Don't even bother doing it. Don't do it. It's gonna mess you up. As simple as that. But literally after that, just let your trade run. That's why when it came to oil, as I said, like it was a fresh. I only like to take fresh trades, but when it came to oil, and I took it for a second week, I saw it hit my TP. I was literally watching it, and I could have done damage control if I wanted to. I just let it hit my TP because I don't want to close out and then it now goes up. And I'm like, oh shit, I should have held. No, if it hits my TP, hit my TP. I'm going to get it back. Kind of thing. Like I'm trying to keep it as mechanical as possible. No emotions attached. If it wants to hit my TP, I've got my if it wants to hit my stop loss, I've got my stop loss in place in a certain area for a certain reason. Let it do what it needs to do. I'm going to get it back in blood. It's as simple as that. It's a good way to minimize your losses, I'll be honest. But I don't really care for that. If it wants to hit my stop loss, it can hit my stop loss. It doesn't make any difference to me because if I do damage control and I'm still watching that same setup, bearing in mind, let's say if you risk 1%, let's say, right? And you do damage control and let's say you don't even get out at your entry level again. Let's just say you get out in drawdown, not your full drawdown, but you get out in maybe half of your drawdown, right? So 50% of your risk percentage, so 0.5%. So you taking a 0.5% loss now. You decide to get back in that same trade, and Don't forget to post the video on using fractals. Right? Yeah, don't worry, I got you for that. Don't worry. But yeah, going back to what I'm saying. So you've already took a 0.5% loss, right? Because you decided to get out halfway through your drawdown, right? You didn't get out of your entry, but you got out halfway through your drawdown. You decide to get back in again with the same risk percentage that you put the first time, 1%. Guess what's going to happen? If price doesn't want to go in your favor and go towards your TP and price comes back down to hit your stop loss, that is now 1% that you lost plus the 0.5% that you lost the previous time. That's 1.5% that you've now lost. Even if you did 0.5% the next time instead of 1% and it hit your stop loss, then now it means that you actually just took a 1% loss. Guess what you could have done? You could have just put 1% the very first time in the first place, like you did initially, and let it run. It would have hit your TP either way. So that's why I personally just wouldn't do damage control, because I've also backtested it in the sense of, yeah, you might be limiting your how much you lose, and you're saving how much you lose from your account as well. But you are now more involved with the actual trades as well. You're putting more of your emotion. You're gonna end up putting more of your emotions involved with the trade. Yeah, you might say you're doing damage control because it's part of the strategy, but let's be real. If you want to get back in the trade because you've done damage control and you see price is clearly heading back up in your direction, you don't even know if it's heading back up in your direction because you're the one that decides to do damage control. You didn't let the trade run. So as much as it is a technical aspect of it, it is just as much as an emotional aspect of it as well. That's why I just let my trade run. Whatever. If it hits my stop loss, it hit my stop loss. Statistically, if you've done your back test, you know how much times you're going to lose. Brian constantly says 80% win rate, and I can attest to that. I can show you, and I'll probably show you when I do the video, but I can attest to that. Like, they are literally 80%. And if it's not 80%, it is literally maybe even at 78.6% or 76%. Round it up, it's 80%. 80% win rate. That's not return rate, by the way. That is win rate. So it is pretty high. And that is literally whilst letting your stop loss, whilst letting the trades hit your stop loss or break even. But actually, the figure is actually for hitting your stop loss. So imagine if you do it for breaking even, it's your win rate is actually going to be more than that because you're not actually losing anything when you're breaking even. So that's why I just let that shit run, man. It is what it is.
But it's also kind of a psychology thing too, because once you set your trade, you should already accept the loss just as well as you've accepted the win. So if you get into this habit of damage control, you could possibly mess up your psyche because you could lose more because you're doing damage control. Because that used to mess my head up, that I was doing damage control and then price hit my TP later because I was trying to do damage control.
Exactly. You see? I'm still here, but let me just wrap this video up. Thanks for joining, guys. Don't forget to like, subscribe, comment. Peace.